Hello, welcome back to My Network. We have a special here. We've actually left the conference at PDAC and Canada Nickel have kindly invited us to their offices here in Toronto. I'm joined with Mark Selby, the CEO, and Steve Borsch, the VP of Exploration. So, gents, thank you both for joining us.
Thanks for coming over.
Just to kick things off, obviously, you guys have been on the channel a few times, especially with Rod White. And I think though most people in the industry are actually quite aware of who you are and what you're up to. One of the most interesting parts of the nickel market at the moment is this story at the moment, outside of Crawford and the exploration potential and the story, is actually the nickel market itself. Yep. And so, Mark, obviously no one better to talk to about this than yourself. To give us a bit of a run through of where we are, because there's a lot of negative narrative coming from Indonesia. So tell me about what's going on.
Yeah, and there's been a transformation point over the last week. So, if you basically, were following the news for the last 2 months, we went through what is a classic capitulation moment in a market. You had a bunch of people announce closures. BHP Billiton, about 2 weeks ago, announced that, they were looking at actually shutting down the entire Nickel West operation and didn't see the nickel market come into balance until, the mid-20s at the earliest and the late 20s at the latest. That was fundamentally, different than sort of where I believe the market is. The reality is nickel demand's grown at almost 10% a year since 2020. Unfortunately, we have a lot of bad analysts in this sector, and I am calling out Woodmac and CRU on this, just because their forecasts back to 2019. Woodmac's number for 2030 of 3.2 million tons, we actually passed last year, 7 years early. So these quote experts, and it's clear BHP is listening to some of these quote experts on where the nickel market is. Again, there's been talk of substantial surpluses, running 7-8% of the market. I've struggled with this all year, and because again, as someone who's been in the industry for 20 years, when you have that much nickel lying around, there's usually a bunch of market indicators, that would easily drive you to that. And so I was skeptical that, the actual surplus is, sort of about of last year was sort of in the 80 to 100,000 ton range. Last week, Jim Lennon, who's probably the most respected bank analyst, on the nickel market, he personally traveled to China, went around, talked to a number of consumers, so forth, and then became very clear to him there was about 100 to 150,000 tons of nickel demand that was not being captured in the Chinese numbers. And we'll have to see whether that's deliberate or just oops by the agencies that do that within China. And then on the supply side, there's probably 40 or 50,000 tons of nickel that actually been double counted in terms of supply. So when he backed those out of his numbers, he basically halved his surplus for last year. But more importantly, and in complete contrast to what BHP had said a week earlier, that basically right now he's forecast a surplus of effectively just 1% of the market, or 40,000 tons for 2024. My demand forecast is a few percentage points higher than Jim, so that would imply that we're actually going to be in deficit this year. So don't believe the news. The nickel market is in far better shape. Again, saw the same sort of nonsense back in the 2000s, and again, no one has forecast demand growth of anywhere close to 10%, but we've already been able to achieve so far with the EV market. So I think 2024 is going to be a sharp contrast to what was being said basically 6 weeks ago.
And okay, so BHP, obviously, one of the amazing stats at the moment that I was reading was that over half of the producing nickel mines in the world at the moment are currently running at a loss.
Yep.
Obviously, the idea is that low prices fix low prices, and obviously after a sustained period of time, obviously with all of these mines coming offline, we should see prices increase.
Yep.
The other narrative is, and I know you've just expelled some of that, but the other narrative is that there is fundamentally so much nickel coming out of it in Indonesia in the next 5 to 10 years that potentially it could displace the rest of that anyway. Is that, in your mind, just completely false?
Completely false, complete nonsense. Nickel demand is going to grow by 2 to 3 million tons, from where we are right now. So we need every, all of the Indonesian capacity needs to come to market. The the reality is Indonesia has already said that basically we're not going to increase mining quotas this year, 2024 versus 2023. They will manage, and they basically said we're going to try and manage prices in a range between 15 and 18,000. They'll make way more money if nickel prices are 20 to 22. So, wouldn't be surprised to see actual nickel prices, trade in that range for a period of time. And the other reality is laterite deposits are really easy to high grade. So they've been high grading those deposits for a while. So you're starting to see grades come off. So I really do think actually Indonesia is going to even struggle to keep pace, with the kind of growth we're seeing in the marketplace. And, the great thing about, we've just gone through what looks like a bottom, and we bottomed at $16,000 a ton, or $7.25 a pound. If you'd said to people 15 years ago, the future floor price for nickel is $7.25 a pound, they would have been doing a happy dance. So, and for us personally, our Crawford's going to be a fraction of that as cash cost operation. So if going forward, this is our quote new floor price, then we'll be in great shape.
Good. All right. Well, that leads us on nicely to Crawford. So obviously you released the economics last year. Just remind us of the headline numbers and the actual assumptions that you've used within those numbers.
Yeah. So $2.6 billion NPV, including the carbon capture tax credit, which we're quite sure we're going to get, 18% IRR. That'll produce the second phase production will produce almost 50,000 tons of nickel for a 27-year period. Will be the third largest nickel sulfide operation globally, the Western world's largest nickel sulfide operation. And again, at an all-in cost of less than $4,000 a ton. So, very, very robust economics, which we're quite happy with.
And it's because I think a lot of people, if they look at the grade or they look at the metallurgy, they'll look at this and they'll go, oh, it can't work. It can't work, right? You do get that perception every now and then. How does this work, given there are these critiques? Is it purely just the scale of this project?
Yeah, it's just the scale. I mean, the reality is if you look at the NSR per ton in terms of what we're processing, it's equivalent to 0.3 to 0.4% copper projects. That's, I think, Cobre Panama was a 0.38% life of mine project. And so, yeah, you're basically just taking the right scale to bring your unit cost down to a point where, $30 rock initially, and I think $25 life of mine rock, generates a significant amount of value.
Good. Okay. Obviously, Agnico coming on board, still very impressive. Even though it was, when was that? Was about 3 months ago now? 2 months ago?
January.
Beginning of January. Okay. Beginning of the year. And then obviously followed on by Samsung. I want to touch on Agnico first because they've obviously provided you 30 plus million Canadian of flow through.
Yeah.
And obviously, as people know, with flow through, that money needs to go into the ground with Canadian projects.
Yeah.
So one of the questions I think a lot of people would ask is obviously you have a resource third largest in the world once in production, right? What does finding new discoveries actually do for you, considering you've got such a large deposit already?
Yeah. So the key piece there really is Agnico Eagle is our next door neighbor. If you look at their asset base, probably 2/3 of the value of that company is within a few hundred kilometers of Crawford. So yeah, Crawford's impressive, but what we've been talking about, increasingly over the last year is that we really think, we are sitting on what could be the world's largest nickel sulfide district. If that's the case, Agnico would like us to see, sooner than later, whether that's the case. And so, with that money, we're going to have an aggressive exploration program. And again, it's great to have one great deposit, but if it turns out, we actually really are sitting on the world's largest nickel sulfide district, all of these deposits with the ability to basically capture and store, large amounts of CO2, it's exactly what the nickel market needs, exactly what EV, automakers want. So, it's a massive step forward for us. So it means Steve is going to have a very, very busy year this year.
Okay, well, say why don't we switch to you, Crawford? As it sounds, people know how geologically that looks. Are you expecting to find anything different in this district?
So we have 15 properties. 7 of them this year we're going to develop a resource on. 6 or 7 we're going to do some advanced exploration on, and then develop a resource starting next year. And most of the properties are very similar to Crawford, but I'd say probably 4 or 5 of them are even larger. So I would expect to see a larger tonnage on each property. The grades are going to be similar, and then these deposits are very continuous and and very similar geologically.
Going back millions of years, but the mind boggles a bit in terms of how large Crawford is in itself, and you're talking about a whole district here with potentially 10 plus of these.
Yeah.
How geologically are these formed in terms of these huge blowout structures? And I wouldn't mind just getting my head around that.
Sure. So 2.7 billion years ago, when the Earth's crust was a lot thinner and the mantle was a lot more liquid than it is today, these magma chambers ascended and cooled and began to differentiate. And they started with peridotite at the bottom, which is mostly olivine. Then there was a core of dunite, which is what we're exploring for, which is almost 100% olivine, and that's where the nickel and the cobalt and the iron is situated. And then peridotite, and then it grades into pyroxenite, where you have the layers of palladium and platinum, our PGM reef. And then it grades into gabbros and diorites that are not really of economic interest. But that happened 2.7 billion years ago. Then they serpentinized, so all the nickel and iron was liberated from the olivine, and then they've just been sitting there. Sometimes they get folded and faulted and twisted around, and that's a bit more difficult to explore. But Crawford's a very simple geology. There's just one fault there, and a lot of our other projects, we picked them because they're simple to explore, and they're going to be consistent to mine.
Okay, and how have you determined that there's 15 targets? I think Mark's spoken about this in the past, but you've done, was it a lot of geophysics that you've done and a lot of aeromag?
Yeah, we took free data available from the provincial government, and we imaged it because these ultramafic units are very strongly magnetic, and they stand out against all the other geology. And then we fine-tuned that against Crawford and also the Dumont deposit in Quebec to identify, I think, 25 different targets. And then we just systematically went through. If they were open, we staked them. If they were owned by someone else, we did a deal to acquire them. And I think we've only not been able to get 3 of the 25 we went after originally. So we have the lion's share of these.
Okay, and I guess the most important thing is this use of proceeds, right? You've got a bit of a war chest that you're responsible for, given you're the geo and pointing the drill data. How are you going to be systematically spending this money to discover the next Crawfords?
It's mostly drilling. We got $35 million to go into the exploration budget, which is pretty large for a junior company. And we can drill 90,000 to 100,000 meters in 1 year. We've already drilled 10,000 meters, and we're about 5 to 10% ahead of schedule. So we're tracking that very closely, but it's almost all drilling, and then sampling, core splitting, assaying, and so on.
Okay. And you say you're already 10% way through that. I assume even visually are things looking the way that you'd assume when our assays due?
Yeah, we've done a lot of advanced work on these properties, so we're only going into the ones where we're very confident we're going to get a resource from them. And so far at Reed, Deluro, and Bannockburn, everything's looking very, what we expected to find, we're finding. We found a little bit of native copper, which was odd, but interesting. And yeah, we'll probably drill 40 holes at Reed and have a resource that's similar in size to Crawford. Okay. And Deluro and Bannockburn a little smaller. Midlothian has higher grades than Crawford, and we'll start drilling there in the summer. So the idea is to have 7 new resources by the end of 2024, and then 6 of our other properties will have done some advanced exploration, so we can start drilling resources off there in 2025.
Okay. And I guess, Mark, if Steve succeeds at his job, and he seems pretty confident, but I guess the pathway here for you guys to have the largest nickel district in the world is probably not that far away now, by the sounds of it.
No, not at all. I mean, when you look at sort of the 7 resources that Steve's talking about, so that's on a geophysical footprint that's almost 10 times larger than Crawford. Now, we're not going to drill out, all of the geophysical footprint this year, but we will be drilling out, a fairly sizable chunk of it. So, and in terms of hit rate, in terms of our regional exploration since we've got started outside Crawford, 94% of our holes have hit. Since 2022, we've drilled more than 100 holes, and we haven't had a miss yet. So, I don't know whether we'll end up at double or triple or quadruple Crawford, but that's where we could be by this time next year.
Okay, good. And like you said, Agnico were the guys who believed that there were more as well. I'm assuming that's why they've given you the money to go and look for this stuff.
Yeah.
What's their perspective on this? And because you've got 3 strategics in the company at the moment, and I think it'd be quite good to understand, just to start with, where Agnico are coming from, because obviously they're looking for you to grow into a district scale, well, the world's largest nickel camp, right? How does that compete, say, for example, with the needs of Anglo American, who are also in there for 10%?
Yeah, no, I mean, when A, it's great to have 3 strategics in there, but B, what you don't want is, elephants, bumping into each other, because sometimes the small guy gets stomped. In our case, it works out quite well. Like each of the company's interests are relatively complementary and don't really have any conflict. So, Anglo American came in a year ago, said, look, we've got this package of future smart technologies that we think can add value to Ultramafics, and we want to work with you guys to see if we can prove some of that out. So that work is continuing to be ongoing. So that was Anglo's angle at it. Agnico, as you said, basically is as our next door neighbor, is there really a district there or not, and do we have our finger, we've got our finger on it as a starting point. And then Samsung SDI is really, their focus is just the offtake, right? Yes, they came in as equity holder. They've got an option to buy a chunk of the project because, fundamentally, if you want to lower your overall cost of nickel that you're acquiring, the best way to do it is effectively get it at the cash cost of the operation, that's going to produce it. So, having a portion of 10% of the project, but 30% of the offtake gives them a blended number that, works out, quite well for them in terms of their overall product acquisition costs. So yeah, no, it's worked out. We were only a couple minutes in with Agnico and Samsung, but not anticipating any issues whatsoever.
Good. Okay. Look, just before we go on to, because I have a few follow-up questions with Samsung and some of the downstream plans that you have, but I want to get onto that. But just on the carbon credit side, obviously you were talking about the economics earlier, and you said that included carbon credits. Can you just tell us a little bit about that? But I also want to understand the carbon capture business. Yeah. And is that more there for the ESG criteria and the net positive of environmental benefit, or is there an actual tangible economic benefit as well?
So yeah, one is definitely it's good. It's the right thing to do. But B, no, the business case is there. I mean, we work with one of the big consulting firms to come up with, a storage charge that we could charge people to store their carbon. And so, there's a, business case on that works. And we think the numbers are in there are conservative, but, for us, and part of the reason to do the downstream in Timmins is that, so we have a net footprint of negative 30 tons of CO2, exiting the mine. And so by doing the nickel processing nearby and then doing the stainless steel processing nearby, we can take any CO2 that gets generated from either of those plants and just pump it back into our own tailings. So we'll be able to produce a zero carbon stainless steel, and a zero carbon nickel product. And so, there's no premium baked into, any of the pricing that's there. If you look already at pricing in North America for stainless steel, carbon steel, other products, there's already a domestic premium that's available. So, we think, that's there, and that's why we want to, be there to capture some of that premium. But I think, and then going forward, given the geopolitics of, I don't think there's going to be any sort of rapprochement with China anytime soon. And, with the carbon footprint, particularly in nickel, with so much of the Indonesian production having a massive carbon footprint, we don't know where it's going to go. But right now, any increase or premium that emerges for low carbon, zero carbon product, is basically going to be extra gravy in terms of the economics that are there. So. Okay.
But in terms of the business itself of charging other companies, obviously I know you can offset it with your existing downstream facilities, the planned downstream facilities that you have coming up. But what about charging other companies and having that as a revenue source? How profitable is that in itself as as a business?
Yeah. So what we've assumed in the feasibility study is our operating cost to store the carbon is about $11 a ton, and the consulting firm estimated, at a minimum, we should be able to charge, given the pricing expectations in Canada, should be able to charge $25 a ton.
Okay.
Yeah. So and we've been approached by two of the biggest companies who would be carbon solution providers in North America to be able to look at using our storage. So we knew we were on the right track when companies that are 100 times your size start knocking on the door. So
obviously within that, we just discussed Downstream. That's a relatively new announcement or a relatively new idea that you've brought to the market. And I'm not sure if we've actually discussed that on this show yet. So maybe you can what's the general idea with that?
Yeah, so we created our Net Zero Metals subsidiaries sort of back in 2020, and have been thinking about it during that time. We haven't said much publicly at this time, but it was really around once the feasibility study for Crawford's out, when you step back and you look at the North American landscape, both the Canadian government and the provincial government here in Ontario have a stated, mine to EV strategy. So they want to basically, Ontario is one of the few jurisdictions in the world that mines metals and actually produces cars. So there's this, basically, really excellent once in a generation chance for, Ontario to build these supply chains that will last another 50 to 100 years. When you look at that supply chain, the weak link really is that first stage processing after you produce, the first product that comes out of a mine. And so, if you don't have it in province, Vale and Glencore, who are the sort of, incumbent players, haven't talked, they've been struggling to fill the plants they have, never mind expand them. And so, we see, this massive market opportunity to take advantage of it. And, financially, why it makes sense. One, as I said, if you look at, like product for like product in nickel, there's a big premium here in North America for that. For stainless steel, there's literally hundreds of dollars a ton of additional premium in the North American market versus what stainless steel sells for in other parts of the world. That's number one. Number two, again, we've got this critical minerals refundable tax credit with the federal government that gives us 30 cents on every dollar that we invest. These processing plants are 100% what the government wants to see, and once they've announced these programs to see these kinds of projects get built, and we've had discussions since we made the announcement, that we'll get even more funding from the government for the process plants than we will for the mine itself, and we'll be getting lots of money from the government for the mine, and so the ability to basically build an asset that will last for hopefully a century. And being able to fund that with free leverage from the government, just seems to me like a once in a generation opportunity to create value. And that's why we've jumped on it. We've got a very experienced team. Mike ran Inco's refinery network. He worked at Inco for 30 years, ran Inco's refinery network globally for probably 10 or 15 of those years. And so, we've got one MB's joining us from Korea, KG's joining us from Japan. They've run plants of the sort that we want to build. It's not new technology. There's very little technology risk involved in either process, and we're going to be rolling forward on that full steam ahead.
How are you envisioning that this is connected to Canada Nickel in terms of the corporate structure? So is this just a direct subsidiary? Canada Nickel own 100% of this processing facility?
Yeah. So right now it's set up as 100% subsidiaries. Whether we end up getting investors into the, one of the benefits of having 20 plus. Assets that Steve pulled together, over a 2 or 3 year period, and then having, these kind of unique set of capabilities and know-how, it gives us a lot of levers in terms of how we unlock value from the asset base that we have. So, right now we own all these assets, these, subcos 100%, but, we could see investment come in it that way, which generates cash for Canada Nickel without really diluting shareholders' exposure to Crawford.
Okay, and does this... Because the way I always looked at this was obviously, and it's similar in graphite and manganese when you're creating higher end products like anode material or cathode material, but you're essentially then able to sell the product that you've mined, you then process it downstream and you can sell it at a much larger premium, right? So I'm assuming that then, given that metals are pretty cyclical and you have these highs and lows, does that give you a little bit of protection in terms of in terms of the profitability of the entire operation, including the downstream?
Oh, for sure. I mean, one of the having that additional effectively premium revenue, because that premium revenue tends to be a little less volatile. And so, having a non-volatile revenue stream that's all gravy is a big plus.
And so how are you actually looking at proceeding with it? Because obviously Crawford itself, I know there's potentially a lot of government funding coming in there, which is going to help. And you seem like, obviously with offtakes, you're on the right path to actually funding Crawford. Yeah. But again, funding another project like this, and it sounds, I know you set the company up in 2020, but it's still relatively early days, I'd assume. Is this something that you're thinking of building in tandem with Crawford, so that once the switch is turned on at Crawford, you can put it through the downstream day one? Yeah,
the nickel processing plant will actually come first. We'll have third-party feed go through that plant. Then the steel plant and expanded nickel plant will come online with the first phase of Crawford, and then get expanded again with the second phase there. It is early days, but again, when you use proven technology, you don't have to spend. So we will have a scoping study out by mid-year, feasibility study out by year-end. In terms of the financing package, again, I have most of my net worth in the equity of this company. I'm not going to do anything, and if we can avoid doing any significant equity dilution for either of the projects, that's 100% the goal. And again, with even more government funding available for the process plants, and again, if we have a partner offtake involved, specifically on the downstream, then there's again a very clear line of sight to an equity, project financing stack that doesn't require any kind of broad equity issues attached to it. So,
and you seem very, very confident that the government are going to be there and support you. I'd love to know what gives you that confidence.
Oh, I mean, we've been talking with various levels of government for 18 months. Picture was posted yesterday, so we were with Premier Ford and Ministry of Industry Vic Fideli and George Peary, the mines minister. That's the when you have a project as large and as significant in terms of producing the critical minerals that the country and the province wants produced, and then filling in this critical gap for them on the downstream processing. They're finding ways to be helpful, and again, we've been talking to them for several years now. So we're quite confident that the money's going to show up, and since we've made the announcement, that's been reinforced already. So.
And how does this work in terms of your offtake agreements? Because if you're not created, is this downstream end product what your offtake partners want? Is this what you're promising that you'll be delivering them?
Right now, anything we've basically is concentrate or an agreed upon product. So we've got flexibility to work with them. The reality is, we're going full speed, right? But it's still going to be end of 2027 before any material comes out of the ground. And when you look at, what's happened, 5 years ago, for the battery supply chain, you started with either nickel briquettes or nickel powder, and that's how people started to make the materials that they need. Now in China, there's no nickel or pure nickel that's used to go into the battery supply chain. It's all either mixed hydroxide product or matte product that isn't been further refined. So we want to maintain that flexibility to be able to. And we will with the nickel downstream. We can take 100% of the nickel units into the battery industry that goes through that plant, or we could take 100% of the nickel units that and into the stainless steel supply chain. That's really what we want to focus on doing. And again, have enough flexibility in that flow sheet to make whatever product the market really needs at that point in time in 2027.
Okay. Obviously, with the idea of bringing this, because I wasn't actually aware that you were planning on getting the downstream up before Crawford, which is incredible. Obviously, because there's obviously been feasibility studies and so much news flow on Crawford, it's always been the main focus. But surely, I assume you're going through the permitting process of Crawford at the moment. But surely, whilst that's going on, this business, in terms of news flow outside of drilling, turns into a downstream play just as much as it does the mining play.
Yeah, very much. So, yeah, I mean, given the valuations we are for the mining project, the processing project, good processing operations globally, trade at significantly higher values than where we are today. So
yeah, no, I agree. Okay, so just talk me through some of the milestones that you're expecting to hit with the downstream side of things, because you were talking about some studies coming out and what work needs to be done.
Yeah, so the downstream, so we'll have the scoping studies done on both the nickel and the stainless by mid-year. Now, we'll have feasibility studies complete by the end of this year. Alongside having the financing package for the mine done, we'll look to have the financing package for the downstream, done by early next year as well. As soon as we have a site selected, and we're hopefully going to get that done, in the next month or two, we'll be able to start permitting. And unlike a mine, the permitting process for a process plant, the kind that we're contemplating, is a lot simpler and it can move more quickly. The other piece is Crawford is a 30-month build. These process plants should be between 18 and 24 months. So it gives us an opportunity to sequence in a way that makes sense.
Yeah, no, that makes a lot of sense. And then, Steve, just bring you back in. News flow in terms of drilling. You're saying you're 10% of the way through now. When are you expecting more assays to come through? When are we expecting more results to come through, or the discoveries?
So we're drilling at Reed right now, and the assays will start coming out probably in about 4 to 6 weeks, I think. Yeah. We're also drilling at Deloro, and this summer we're going to drill at Bannockburn, Midlothian, and Man Central. So those would be the main areas we're drilling the resources at. And so we'll have drill results pretty much every month.
Good.
We've got a lot of drilling.
Yeah, once we get to the end of this month, you guys start to see a very steady flow of drilling results. We're basically, started with 0 drills in January, and the team's done a great job. We're ramped up to 4 drills now, and I'll have a 5th drill turning soon. So, yeah.
So, okay, so there's loads going. So you've got all the processing side, which you just mentioned that's going to be going on. We've got all the drill data that will be coming out throughout the whole year, and then on the side of that, you've got permitting to do, you've got offtakes to be talking about. Any expected news flow on those side of things?
On the full financing package, we expect to have place, by year end, and so in the and towards the end of the third quarter into the fourth quarter, you should see a bunch of announcements around JV partners and offtake partners and so forth.
Good. Okay. All right. Awesome update. Thank you guys, and appreciate you having us in your offices.
Nope. Glad you guys could come.